Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities, work our way through the dollar yields, precious metals, and commodities ETFs that I follow. If you need help with anything, check out finding-value.com. That's where I dive into these individual sectors, individual companies in each of these sectors, and can answer your questions as well during the weekends during question and answer sessions. We still have the coupon code is still active, LEAP, LEAP. It is leap year, and that is still active at this time. So let's dive in here, and I'll give you my financial opinions of what I see in the market. So we're starting with the DXY. The DXY continues to head higher along with interest rates. What does that generally mean? Well, the thing that's been driving interest rates, in my opinion, in the shorter term here has been the price of oil. Oil's been one of those drivers driving the price of oil up, is also driving interest rates and the dollar up, in my opinion. So the dollar is more or less a function of how strong one's currency is against other currencies, and one's currency's strength depends on the monetary tightness that is backing it. So the dollar still looks good to go higher. It's looking pretty strong right now. Yields on the short end were up, but we're at resistance going across here. And this could be a shoulder, head, shoulder, where we head and actually turn back up. I know that sounds kind of weird, but that's what I'm seeing. And maybe rates could potentially be heading higher if we break to the upside of this thing. The 10-year yield still looking good to go higher, pretty strong. I'm about to delete this here, and looks like to me that we could head higher once we break through this resistance area, which we already are doing right now. And then we've got the 30-year yield also looking pretty strong today, up 0.86%, and looks like we could continue higher with yields on the long end. So across the board, yields are looking pretty strong, with yields on the long end being stronger than yields on the shorter end, the 2-year. TYX-TNX ratio is still inverted. We went sideways today, but we are still at what I would consider a pretty inverted price. And this is generally a good spot to be looking for gold. Gold goes up when this goes back and uninverts. I don't know if we're going to uninvert yet. I don't know if we've got another 6 months to year of yield curve inversion and rates staying higher for longer. But I'm just stating, generally speaking, when you look at these areas, gold has been a good location to accumulate in those areas. And that's why I look at this chart. Bond prices down a little bit on the 20-year as yields go up, and the momentum is still to the downside. We've got gold that is slightly higher today in the face of stronger dollar and stronger yields. I do think at some point that gold will go up with yields. They might not go up on the same day. So if yields pull back, gold will go up a lot. And then when yields go up, gold can pull back just a little bit, much like this is occurring right now. I think that this is basically a falling wedge that we're about to break to the upside. That's kind of what I'm seeing, potentially. And it looks pretty good. Gold is showing strength on a up day for yields. Silver also holding quite strong, not really a huge reversal candlestick or anything. And we're still above the big long-term trend, that trend line. So if we get strength in gold, I think we're going to see strength in silver as well. A little bit stronger selling pressure in platinum. We're down $23 an ounce today. We could go a little bit lower in the short term. And then palladium was also down quite a bit. And this still, to me, looks like a shoulder, head, shoulder breakout. Maybe we get a retest, maybe we don't. Maybe it's just a big down day today. But we were down $47 an ounce. But I do think this will eventually work its way higher. as we move around here and base out. XAU to gold ratio, a little bit of gold and silver mining companies selling off a little bit more than gold. But overall, it still looks and is held up quite well. And again, big long term, we haven't broken the downtrend line yet. That's one we're watching. CRB index up 0.92%, looking pretty strong. That is what I'm seeing there. Momentum to the upside. I think oil's ready to rip. And the CRB index is heavily weighted in oil. But this looks fantastic, guys. And really, what is driving this? Liquidity. Liquidity is driving this. Liquidity's been going up in the system. And wherever there's shortages in the system, liquidity is where it's going to go. It's going to go where the problems are in the market. CRB to S&P 500, it is looking like it's starting to work its way on up. Looks really strong. Let's hope it can continue, and the momentum continues higher, and we break into a big commodity third wave. Very well could be possible here, and we're coming from a very low, very opportune time to be looking at commodities right now, where we could see a very big move with this ratio and the commodity index in general. So GDX is slightly lower today, and gold was slightly up, but still looks good. No reversal candlestick, still above support. Still looks pretty constructive is what I'll say. GDXJ also looks very good. Yeah, we had a little bit of selling pressure. Yeah, we could pull back and do a loop. Still looking good in my opinion. Now, if rates really start to move to the upside, it could kill this rally and we could come back a little bit further if rates get moving. And we come back like this and do another cycle back down. Very well could be the case. And then SILJ also getting a little bit of selling pressure, and we could see a little bit of downside movement. This is a bearish engulfing today. We're right above that trend line. So are we going to get rejected on the trend line and come back, or are we just going to go sideways a little bit and then move on up? I don't know the path, but we do have a little bit of selling pressure, and we could sell off a little bit or go sideways for a little while. Crude oil just ripping today. Looks fantastic, guys. Big move today. We had the bloody nose candlestick Friday. That's a continuation pattern. We've got our continuation today. It finished quite strong, and we could see a run of crude oil to the upside. It looks really good. TTF nat gas up 7.7%. That's running to the upside. So we came back to support, that big support level. We bounced at support twice, and now we're ripping to the upside. Looks pretty good for natural gas. And then natural gas in America up 3.5%. And again, we could still be down here working our way, basing out. It could take a little bit of time for that basing pattern to work its way on out. Our boy XOP, yeah, you know me, right at the neckline, right at resistance. We will get through this, guys. It's not a huge selling pressure candlestick, and I know we were up on crude oil. It's almost as if XOP doesn't give a crap about crude oil anymore. It's kind of doing its own thing. But we were down again. It looks like we've got a little dividend. So maybe it was a dividend payout. Yeah. Looks like the X date. So the dividend X date is the reason it was down. But it's looking good. We're right at the neckline, and I think we're ready to rip here at any second, guys. Any second, and we're going to be in a big full-on bull mode for XOP. OIH, the energy service company, is also looking quite good. We continue to bubble higher, is what I'll call it, after breaking the downtrend line. I think that OIH, on a longer-term perspective, is going to go vastly higher over the next decade. Yes, we are still below. You'd be buying it at the last bull market right at the beginning. That's how cheap it is. And I think something like that is going to come, or maybe even bigger. Why do I say that? It all depends on the tier. You got tier 1, tier 2 acreage. I think we're going to get less productivity out of a lot of the drills we drill. There could be some technologies that increase the productivity back. We'll see. But I think we're going to go on a drilling boom, a big one. And people think that electric vehicles and all these other alternatives are out there. I don't think they're out there, guys. I think that this is going to turn from plan C or plan B to plan A immediately. And it's going to move at a very good rate. If we get into an inflationary environment, that's really going to push oil higher. And the demand for oil has been very good. So I think OIH looks absolutely fantastic. Sprott Physical Uranium Trust looks like we were up today, 1.43. We're back within the pattern. It's looking good for the Sprott Physical Uranium Trust. It's holding in there. Momentum is still to the downside, and we're trying to work that momentum off. And we very well could be putting in a bottom and working on up. URA up 1%. I'm not as convinced when I look at this chart, though, and some of these other equity charts. What I don't like about this chart is we've got downside momentum. We've come on up and we've struggled coming up, and it got hit on its head right there with that big bearish engulfing. We have another bearish engulfing sitting right there. And the bounce is not a convincing bounce. What I look at is I look at one big selling pressure day here, and we've taken 3 days to come back up and not even hit its high. That spells to me that we could definitely roll over and sell off even further than what we have. What would convince me otherwise? I'm going to have to see some big buying pressure here. But as of right now, I remain bearish, and I know that seems weird, but that's what I've seen in history. URNM, it's up a little bit. Remember, 3 days inside this big bearish engulfing. I think we're going lower. Still, I think there's still some selling pressure left in this thing. And URNJ is the same thing. It's not bouncing and making big engulfing candlesticks or reversal candlesticks. We do have a lot of support here. There's a lot of support that we're at, but we may need to base out further before heading higher. I just don't see the reversal candlesticks yet. TAN up a little bit. It looks like it's finding some support right where it's at. That is in the face of increasing interest rates in dollar. Copper up a little bit. It was up a lot this morning, but this is still a monster breakout here. And I think we'll eventually just continue to work our way higher with copper. COPX down a little bit. This is a bearish engulfing pattern that generally works its way lower. It may even be like a falling wedge or something like that, whatever it is. We'll watch it together, but it is a bearish candlestick, and we could head lower in the short term. Lithium up 1.7%. To me, we've got a nice little trend line going, and we got a little bit of resistance there. So we'll see if we can break to the upside. REMX also squeezing up, and we'll see which direction. If we break out of this, I will be bullish. This is an inverted shoulder head shoulder also that's broken retest, and it's kind of right there. So I do think that it will probably break to the upside, and it does look very good. SPX, I don't know how it keeps pulling this off, but we are up today, and the momentum is slowing. We'll see where we go. Give it a few more trading sessions. NASDAQ also up today, but I don't like the way this thing looks. We are coming right into the top of a rising wedge, and we basically are just moving sideways. We also have a bearish engulfing pattern there, which indicates we could go lower. I'm in the lower camp or sideways camp at this time. KRE down 1.42%. That is a dividend day, so it goes down on X dividend days. Emerging markets slightly higher, but we had stronger yields in dollar, which is actually pretty strong for emerging markets at this time. XHB, we were down 0.5%. Remember, stronger yield, stronger dollar, doesn't like it. But we are still moving on up, and it also is an X dividend date, which will have an impact on the pricing. As they pay that out, they account for that payout. MOO up 0.37%. I think this looks fantastic for a move higher eventually. We do have a bearish engulfing here, but we're still above all this support level. And to me, I think this is going to drift higher. Yes, it could go sideways for a little longer like this, but it'll work its way on up. A lot of the charts look pretty good in the agribusiness ETF. FEF, the iron ore, still working its way lower. We have a reversal candlestick, which is a bullish engulfing that we had last Friday. And we'll see if we can get some momentum here. I think we'll probably work sideways before moving on up. Nickel up 2.5%. Nickel is definitely bottom. This looks good to go higher. So the nickel stocks are probably looking pretty good. Aluminum flat, but I know a lot of the aluminum companies look pretty good. but flat today. Still looks good to go higher. We've got Baltic Dry Index moving its way on up, looking fantastic for a continued move up. The momentum's to the upside. Newcastle Coal down a little bit, but I do think this is basing out. It'll probably start turning up at some point. I don't know what that point is, but I think it will be soon, and that we're putting in a nice, good base here. Bitcoin down 1.7%. We have a decent candlestick here, and we'll see where this goes. Momentum is to the downside, and it's just moving sideways at this moment. Ethereum down 4%. Looks like the momentum's starting to pick up to the downward way. Maybe we've got a further pullback in Ethereum here, and that looks to be the case. And SMCI was down 6.38%. We're starting to get larger selling pressure candlesticks. This is generally the time to make a run for the exit. And NVIDIA also getting a little bit, well, this is your bearish engulfing here. Big selling pressure candlestick. It was probably done on high volume. There's your big volume selling pressure day. So you see that big volume down there? Yeah, that's a big distribution candlestick. So I do think this could work its way lower. It could go sideways for a while. There's a lot of momentum behind this. And a lot of the times it's going to have to work that momentum off. So we'll see. We'll continue to watch it. But this is what a top, I think, the beginning of a top might look like. And we're seeing weakness in other stocks. But we'll watch it. That's what I'll say. But that's what I've got for today. Thumb up for the content. Subscribe to the channel. Subscribe to the website. If you guys like, we do have a question and answer session coming on up this weekend at, I believe it's Sunday at 5 p.m. So we can all discuss a lot of stocks. I will do a presentation in the beginning of that question and answer session. I'm going to go over again, because it is so important, position sizing, risk. If I were to create a $100,000 portfolio, how would I implement it today? And I'll answer that. And I'll go through what I use to look at. And I'm going to dive into some of the risk rewards, the things I look at to look out for when you're looking at some of these companies. And I'll probably go into how I'm evaluating them too, in terms of technical analysis and all that stuff. So it'd be one to definitely attend, one to watch if you guys are interested in that topic and section. And in all honesty, guys, I mean, that's where a lot of the returns come from. You have to be really picky on how you set up your portfolio. And your portfolio should be an extension of who you are, your personality traits, your ability to weather volatility, how aggressive you want to be or don't want to be. And some of the companies, you should be looking for risk-reward opportunities. And what is risk? What's the reward? What's the difference between two companies' risk-reward levels? How much do I attribute risk to this company versus how much I attribute to another one? And why do I attribute so much risk to one or the other? All of those things. So we'll go over it this weekend. And hopefully it'll be a fun one for you guys. And hopefully you'll learn a lot and you can implement it to your own portfolio. Again, it's not advice or anything like that. I'm just going to tell you how I set mine up and what I look at and what I look for. All right, guys. We'll catch you next time. This is Finding Value.